During stock market crashes, fortunes are made and fortunes are lost. Right now is certainly one of those times. The date is April 6, 2020, and our economy is currently being threatened by the rapid worldwide spread of the coronavirus. Thanks a lot, Wuhan. When is eating a bat ever a good idea anyways? Maybe, we should stop eating bats? All jokes aside, I hope you and your families are healthy during this scary time. Anyways, the world is in an uproar right now, and in an effort to slow down the spread of the virus, sporting events are being canceled, schools and stores are being shut down, and we're even being encouraged by the government to self-quarantine ourselves. And this is all having a major effect on our economy. Nobody knows what the future holds or how bad this will get, and that fear and panic has caused huge declines in stock prices. This past month is the worst month we've seen in the market since October of 1987. But large market moves like we're seeing creates extreme opportunity. So with that being said, let's talk about a few different strategies we could use to take advantage of this market crash. Strategy number 1, buy stocks. This one is the obvious one. This is a great strategy if you'd prefer to be a bit more hands-off and passive, and if you are okay with holding the position for a while if you have to. And listen, even if you are an advanced trader with veteran level experience, you are never too good for the old school buy and hold strategy. I'm personally a very active trader, and buying and holding stocks is certainly not my go-to strategy. But when the most stable companies in the world are trading at huge discounts, it's proven to be a pretty good idea to scoop up a few shares to hold for the long term. This video is not meant to be a stock picking video. All of the big stocks are very correlated during times like this anyways, but if you want to play it safe and diversify a bit, you could buy any of the index ETFs like SPY, QQQ, DIA, or you could speculate a bit and pick individual companies. Simple enough. I've personally been loading up on a few shares of my favorite companies as well. Now, I don't have a ton of money invested as I like to keep most of my cash free for the active trading that we'll talk about in a second, but you can see that these stocks are doing pretty well so far. And I actually did take profits on most of this Boeing position since I caught a 60% move in just 7 days. So you don't necessarily have to hold them long term if you get that big of a move in such a short time. But setting trades up with the expectation to hold them long term is what's important. And you can also see I'm not up a ton on the year. We're a little over 3 months into the year. I'm up around $8,700, but the fact that I'm up at all with this market down 25% is a positive in my book. The reason for this is because before the crash, I didn't own stocks. I was just actively trading options. And we're going to get to that in a second because I believe the opportunity for trading options right now is greater than ever before. But first, before we move on, here's a few tips I have for buying stocks. Number 1, buy into weakness, not strength. I think most veteran traders would agree with me here. Don't wait until everyone is done panicking and for the market to start reversing before buying. After this kind of a sell-off, there's going to be plenty more dips. Buy into them rather than chasing the market around. Okay, number 2, diversify a bit. Sure, it's pretty tempting to buy a ton of airline stock right now, and to be honest, it probably will pay off. But the safest bet is on the US economy as a whole, not on certain industries. It's okay to speculate and buy certain industries, but it's always good to diversify a bit. Okay, last one, patience. Buying stocks works. It always has. But the key is understanding that for this to work, you need to have patience. And to have patience, you have to mentally be okay with having money tied up for a while so you aren't tempted to pull your investments prematurely. Invest responsibly and make sure you aren't sizing your positions too big. Now, in addition to buying stocks to hold for the long term, let me show you a more active approach I'm using to trade this market. Strategy number 2, sell put options. This one is specifically great during market crashes because it allows you to capitalize on the extreme fear we are seeing in the market. And what's great about this strategy is you can actually use it to establish stock positions like we talked about a second ago. If you aren't familiar with options, they are essentially just insurance for stocks. Just the same way you can buy insurance on your car or your home, investors who own stock can buy insurance for their stock investment. And you, as a trader, can sell them that insurance. Now, this isn't meant to be a video explaining the basics of options trading. We already have many videos that cover that. We have a full in-depth trading course covering options in detail, explained very simply. So definitely check that out and check out our other videos on YouTube. Now, let me show you an actual trade I made in Starbucks as an example. When stocks crash this hard, the prices of options explode because everyone is freaking out. Remember, options are like insurance, and while stocks are crashing, investors are panicking and buying options to protect their investments. Simple supply and demand. And check this out. This is the volatility index, or the VIX. Now, the VIX is not a tradable instrument. You can't actually buy or sell shares of the VIX. It's just a gauge for us to look at. But what it is telling us is how expensive option prices are. Specifically, it is a measure of the S&P 500 index options. When the VIX is really high, that means SPX option prices are very high. But remember, everything is correlated. If S&P 500 options are high, that likely means that any stock correlated to the overall market also has very expensive options. And you can see the VIX went all the way up to 85. It hasn't been that high since 2008, 12 years ago. Now, we do also look at the volatility of the individual stock we are trading, in this case, Starbucks. But that's for a whole other video. In fact, we have an awesome video on this topic, so click the link in the description to check out that video. So anyways, back to the Starbucks trade. To take advantage of these expensive option prices, I sold the 55 strike put option in Starbucks for $310 in premium. I basically sold an insurance policy to someone out there, agreeing that I will happily buy their shares from them at $55 per share if the stock were to crash below that within the next 40 days or so. But in return, I would like to be paid $310. Of course, this is all virtual and digital. No actual conversations are had, and I don't even know who took the other side of my trade. The beauty of technology. Now, I sold this 55 strike put option last week when the stock was around $64 per share. Hypothetically, let's say the stock went down to, I don't know, $53 per share, and that's where the stock is at the time the option expires. What happens? Well, now I will simply own 100 shares of Starbucks at $55 per share, because that's the agreement I made. With the current market price at $53 per share, that means I'm down about $200 on the stock. But remember, I collected a $310 premium to make that agreement. So even though the stock went down 11 points from the time I entered this trade, I was able to make a net profit of $110. And now I can simply hold this stock because I wanted to own it anyways. So it's kind of like getting paid $310 to buy this stock that you were going to buy anyways. And now that I own the stock, I can sell covered calls against it to bring in more premium each month. We talk about this strategy in our trading course. Now, what is really cool about this is you can close the option position at any time. You don't have to wait till the expiration date. And as you can see, Starbucks stock has actually went up since I entered the position. In fact, let's see what the position is doing right now. You can see the option I sold for $310 is currently trading around $188, and I have an unrealized profit of around $122. The capital requirement for this trade is only $825. So that means I have a return on capital of around 15% on the trade in just 3 trading days. And that's actually on the low end. Many of my other option trades I've closed are providing 60 or 70% returns on capital because of the volatility. Here at Skyview Trading, we've created tools to help us make better decisions about when to close our option trades to enhance our returns. And we've created these tools around specific trading rules we've put in place. So inputting this trade into the trade management tool, you can see it's signaling me to close the trade because of how fast we've made this profit. We've made 39% of the premium, but have only held the position for 11% of the time. We are outpacing our expected return by 3.5 times. And now we can free up the capital and allocate it to a new trade. So I'm going to go ahead and do that now. And again, you can see I sold the option for $310 and bought it back to close it for $189, so that's a profit of $121. And that's why I'm such a big fan of active trading during markets like this. There's plenty of two-sided action, so you can take profits, free up the capital for a new trade, and rinse and repeat. And this is just one small trade of many. With the VIX this high, I will continue to strategically trade options like this to capitalize on all the fear that is currently in the market. Because fear typically trades at a premium to actual risk. especially during market crashes. So, alright guys, hope you enjoyed the video and are staying safe out there. Be sure to click the like and subscribe button below. And also, be sure to check out our 3 free video series by clicking the link in the video description below. These videos will help your trading tremendously, and they are completely free. All you have to do is click the link, input your email, and we will send you the 3 videos. So, I will see you there.